When you look at the financial headlines today, one story stands out above all the noise. The United States is sitting on a mountain of debt that has never been higher in history. We're talking about over 35 trillion and counting, a number so massive that it's almost hard to wrap your head around. To put that into perspective, if you stacked $1 bills for every dollar the US owes, you could reach the moon and back multiple times. And the scariest part, that number isn't slowing down. Every single day, the debt grows by billions. For decades, the American government has been able to kick the can down the road, borrowing more, spending more, and hoping economic growth would somehow outpace the debt. But today, the cracks in the system are becoming impossible to ignore. Rising interest rates mean that the cost of servicing this debt is skyrocketing. In fact, the US now spends more on interest payments than on defense, which historically has been the largest line item in the federal budget. That alone tells us we're entering uncharted territory. So the question is, how do you fix a problem this big? How do you restore confidence in the dollar when inflation eats away at purchasing power and debt keeps climbing higher? This is where things get really interesting. Recently, Donald Trump has floated a controversial but bold new idea using crypto and gold as part of a plan to stabilize the US economy and tackle the debt crisis head on. Now, whether you love or hate Trump, the fact that a former president and likely future political frontrunner is even talking about these unconventional strategies shows just how serious the debt situation has become. Think about it. For decades, gold has been seen as a safe haven, a store of value that can't be manipulated by central banks. At the same time, cryptocurrency represents the cutting edge of financial innovation, meant a decentralized alternative that challenges the traditional banking system. By bringing these two together, Trump is essentially suggesting a hybrid model that could reshape the financial foundation of the country. Of course, this isn't without controversy. Critics argue that tying the US financial system to gold again could limit economic flexibility. And when it comes to crypto, volatility is a huge concern. How can something that can swing 10% in a day be part of a debt solution? But supporters see this as the exact kind of out-of-the-box thinking America needs. Because let's face it, the old ways of managing debt, printing money, raising taxes, and borrowing more just aren't cutting it anymore. This is about more than just numbers on a balance sheet. The US investment debt crisis impacts everyone, from retirees watching their savings lose value, to workers dealing with higher living costs, to businesses uncertain about the future. If confidence in the dollar erodes, the ripple effects could spread worldwide. Investment. That's why Trump's proposal to turn to gold, stability, and crypto's innovation has sparked such a heated debate. It forces us to ask, is this the beginning of a new financial era, or just another political stunt? In this speech, we're going to break this all down step by step. First, we'll look at the reality of the US debt crisis and why traditional solutions no longer work. Then, we'll examine Trump's proposal in detail, what it means, and how gold and crypto could fit into the picture, and what risks come with such a bold move. Finally, we'll explore the broader implications. Could this strategy truly restore faith in the US economy? Or is it just adding more uncertainty to an already fragile system? No matter which side you fall on, one thing is clear: the US can't keep going down the same path forever. Something has to give. And Trump's plan, whether you agree with it or not, has put the spotlight back on a conversation America can no longer afford to ignore. The US debt crisis is not just some abstract number that economists toss around. It's a reality that impacts every corner of the economy and touches the daily lives of ordinary people. Right now, America is carrying a debt load of more than 35 trillion, and it's growing faster than anyone would have predicted even a few years ago. To put this into perspective, the US government borrows about 100 trillion every 100 days. Imagine running a household where you earn a steady paycheck but keep spending way more than you make, then cover the gap with a credit card that has no limit. Eventually, even if the bank never says no, the interest payments pile up so high that they choke your ability to spend on anything else. That is essentially what's happening to the United States today. The alarming part is how fast the cost of servicing this debt has exploded. A decade ago, interest rates were near zero. Borrowing money was cheap, and it seemed like the government could get away with issuing trillions of dollars in debt without any real consequence. But now, and with interest rates climbing back up to fight inflation, those low-cost loans are rolling over to high-cost ones. In 2023, the US spent more on interest payments alone than it did on defense. Think about that, America. The world's most powerful military force is now spending more money paying back lenders than it does maintaining its national security. And the trajectory suggests it's only going to get worse. For decades, politicians have promised that economic growth would eventually outpace debt, but the reality is the opposite. Every administration, regardless of party, has added to the debt. Tax cuts without equivalent spending cuts, massive stimulus programs, endless wars, and costly social safety nets have all contributed. The pandemic was the final accelerant, injecting trillions of dollars into the economy in the name of emergency relief, but leaving behind a tab that will take generations to pay. And unlike a household, the US government can't just pick up a side hustle or cut back on vacations. It's locked into obligations that are politically impossible to unwind. The problem is also deeply psychological. The strength of the US dollar depends heavily on trust. Trust from foreign investors who buy treasury bonds, trust from domestic savers who keep their money in dollars, and trust from global markets that use the dollar as the world's reserve currency. Investment. If that trust begins to erode, the consequences could be catastrophic. Already, countries like China and Russia have been slowly reducing their reliance on the dollar, experimenting with alternative systems of trade and payment. If too many players decide the US is no longer a safe bet, the value of the dollar could drop, inflation could spiral out of control, and the debt burden would become even heavier. Man, what makes this situation so dangerous is how little room the government has to maneuver. Cutting spending is politically toxic because it means taking away benefits or slashing programs that people rely on. Raising taxes is equally unpopular and risks slowing down the economy. Printing more money to inflate away the debt only makes inflation worse, which eats into purchasing power and makes life more expensive for everyone. In other words, investment. The usual tools in the toolbox are either broken or come with unacceptable trade-offs. That's why we're seeing more radical solutions being proposed, because the conventional playbook has been exhausted. But while it's easy to talk about trillions of dollars in debt, the real-world consequences are often overlooked. For everyday Americans, this crisis translates into higher mortgage rates, more expensive car loans, and skyrocketing credit card interest. Businesses feel it when they try to expand and borrow for new projects, only to find the cost of capital is too high. Retirees feel it when their fixed incomes don't stretch as far because inflation eats away at the value of every dollar. Even young people just starting out in their careers feel it when the cost of education and housing grows faster than wages. The debt crisis is not some distant threat. It's already reshaping the financial reality for millions of people. Another often overlooked aspect is the intergenerational burden. Every dollar borrowed today is essentially a tax on future generations. Children who are just being born right now will inherit a financial system weighed down by obligations they had no part in creating. That's why some economists refer to the debt crisis as the greatest intergenerational injustice in history. We are essentially asking the future to pay for today's mistakes, and at some point that bill is going to come due. What makes this moment particularly urgent is that the US no longer has the luxury of unlimited time. For years, analysts have warned that debt levels were unsustainable, but the low interest rate environment made it easy to ignore those warnings. Now that interest rates are back to historical norms, reality has set in. The government is caught in a vicious cycle. It borrows more to pay for existing obligations, which raises the debt, which increases the interest burden, which requires even more borrowing. It's a treadmill that gets faster every year, and there's no easy way to step off. The growing US debt crisis is not just a line on a spreadsheet. It's a looming storm that threatens to shake the foundations of the global economy. If left unchecked, it could trigger a loss of confidence in the dollar, destabilize financial markets, and erode the standard of living for millions of people. That's why bold ideas are being floated, ideas that would have sounded radical a decade ago. Because at this point, the debt is not just a problem to be managed. It's a ticking time bomb that demands a solution. When Donald Trump first began floating the idea of tackling the US debt crisis with a combination of gold and cryptocurrency, it immediately sparked intense debate. For some, the idea sounded like a desperate move, mixing old world financial stability with futuristic technology. For others, it was a refreshing break from the tired policies of simply raising the debt ceiling, printing more money, or relying on foreign creditors. At its core, investment. And Trump's proposal is about restoring confidence in America's financial system by backing it with assets that can't be manipulated in the same way paper money has been. Whether or not you agree with him, it's hard to deny that the proposal stands out in a time when traditional solutions have failed to address the growing debt burden. The foundation of his proposal lies in the historical role of gold. For centuries, gold has been recognized as a universal store of value. Unlike paper currency, gold cannot be created out of thin air. It's scarce, tangible, and carries intrinsic value across cultures and borders. Before 1971, the United States actually tied the value of the dollar to gold, which meant every dollar issued was backed by a specific amount of gold reserves. That system was abandoned when President Nixon closed the gold window, allowing the dollar to float freely without a hard asset behind it. Since then, the dollar has been backed only by faith in the government and the Federal Reserve's policies. Trump's proposal hints at a partial return to this old model by once again introducing gold as a stabilizing force in the currency system investment. But Trump doesn't stop at gold. He also introduces cryptocurrency into the equation. This is where the idea becomes far more unconventional. Cryptocurrency, particularly Bitcoin, is often referred to as digital gold. It shares some of the same characteristics: limited supply, independence from central banks, and resistance to manipulation. By weaving crypto into the financial system, Trump is suggesting that the U.S. investment could hedge against both inflation and the risks of a purely fiat currency. This would also signal to the world that America is embracing financial innovation instead of resisting it. After all, investment. While some governments are still trying to regulate crypto out of existence, others are experimenting with integrating it into national economies. Trump's plan positions the U.S. as a leader in this space rather than a skeptic. The proposal is bold precisely because it challenges the two extremes of financial thought. On one side, you have traditionalists who believe in the stability of gold and distrust the volatility of crypto. On the other, and you have innovators who see crypto as the future and dismiss gold as outdated. By combining the two, Trump is essentially saying that America doesn't have to choose one or the other. Instead, it can use the stability of gold to ground the system and the innovation of crypto to adapt to a changing global economy. Of course, no plan comes without challenges. And critics argue that tying the dollar partially to gold could limit economic flexibility. If the U.S. were forced to maintain gold reserves proportional to its currency supply, it might struggle to respond quickly in times of crisis, such as wars or recessions. Similarly, crypto's volatility raises questions. How can a government rely on something that can rise or fall by double digits in a single week? These are valid concerns. But Trump supporters argue that volatility is less of an issue when crypto is part of a diversified system that also includes gold. They also point out that volatility decreases as adoption grows, meaning that integrating crypto into the U.S. financial framework could actually accelerate its stabilization. Another interesting aspect of Trump's proposal is its psychological impact. Much of the debt crisis is rooted in confidence in the dollar, in the U.S. economy, and in the government's ability to manage its obligations. By tying the system to assets outside the control of politicians and central banks, Trump is attempting to rebuild that confidence. Imagine foreign investors looking at U.S. and debt and knowing that behind it there are real assets like gold and crypto rather than just promises. Meant that reassurance could make treasury bonds more attractive and help stabilize the borrowing costs that have spiraled out of control in recent years. At the same time, this proposal taps into the populist frustration with traditional financial institutions. Many Americans feel that the Federal Reserve and big banks play by their own rules, while everyday people pay the price through inflation and economic uncertainty. By promoting crypto, an asset class born from the idea of decentralization and independence from banks, Trump is aligning himself with that frustration. And he's essentially saying one needs a system that the elites can't manipulate for their own benefit. That message resonates strongly with voters who are skeptical of Wall Street and Washington. Investment. It's worth noting that Trump has a history of making bold financial moves that initially seem outlandish, but later reshape the conversation. Whether it's challenging trade agreements, questioning interest rate policies, or now proposing a hybrid gold crypto model, he forces debates that others avoid. Even if his exact plan is never implemented, the very act of proposing it pressures policymakers to think differently about the debt crisis. It creates space for conversations about alternative assets, new monetary frameworks, and the risks of staying locked into the status quo. Ultimately, Trump's bold proposal is not just about solving the math of debt. It's about reshaping the psychology of money in America by anchoring the financial system to assets that people trust, both ancient and modern. And he's making the case for a new kind of stability. Whether this approach is practical or not, it reflects the reality that the old ways are failing, and that something new, something dramatic may be the only way forward. Gold has always had a unique place in human history. From ancient civilizations that used it to craft coins and jewelry, to empires that stored it as a symbol of power, to modern economies that once backed their currencies with it, gold has consistently stood the test of time. Unlike paper money, which governments can print endlessly, investment or digital numbers in a bank account that can be manipulated with the click of a button, gold is finite, tangible, and universally recognized as valuable. In the context of the U.S. debt crisis, the idea of returning to gold, even partially, is rooted in this timeless reliability. The argument is simple: if faith in the dollar is eroding, then anchor it to something the world already trusts. When the US dollar was tied to gold under the Bretton Woods system investment, it gave people and nations confidence that every dollar had a backing in real physical reserves. That confidence fueled a America's rise as the world's financial leader. But when President Nixon ended the gold standard in 1971, the dollar became a purely fiat currency, backed only by government promises. While this gave policymakers more flexibility to manage the economy, it also opened the door to excessive money printing, inflation, and eventually met the debt spiral we see today. Trump's suggestion to reintroduce gold into the equation isn't about going back entirely to the old system, but rather about using gold as a stabilizer, a way to signal to the world that America is serious about bringing discipline back into its financial framework. One of the strongest arguments for gold is its historical role as a hedge against inflation. When the value of paper money declines, gold tends to rise. We saw this in the 1970s during high inflation, and again in the 2008 financial crisis, and when gold prices surged as investors fled riskier assets. In today's climate, with inflation still running hotter than policymakers would like, gold offers a level of protection that fiat money cannot. By backing debt or currency with gold, the US would essentially be telling investors, this system has a floor. It's not just promises, it's backed by something real. That kind of reassurance could help restore confidence not only in the US economy, but also in the global role of the dollar. Critics often point out that tying the dollar to gold could restrict flexibility. If the economy needs stimulus during a downturn, and how can the government inject money if it's limited by the amount of gold it holds? This is a valid concern, but proponents argue that a partial gold backing, rather than a full return to the gold standard, could balance stability with flexibility. The government could still manage the economy, but the existence of a gold anchor would act as a guardrail, preventing runaway money printing that fuels both inflation and debt growth. In a sense, gold would serve as a discipline mechanism, forcing policymakers to think twice before expanding the money supply. Another compelling aspect of gold is its universal recognition. Unlike cryptocurrencies, which are still polarizing and not fully understood, gold has been trusted for thousands of years across every culture. Central banks around the world continue to stockpile gold as a reserve asset precisely because it holds value regardless of political shifts, technological changes, or market volatility. If the US were to reintroduce gold into its monetary framework, it would send a powerful signal to both domestic and international markets that America is realigning itself with a form of stability that transcends politics. This could potentially strengthen the dollar's role as the world's reserve currency at a time when other nations are openly exploring alternatives. Gold also has the advantage of being immune to manipulation in the way paper currency can be. Investment. Governments can't create gold at will. It must be mined, refined, and stored. Its scarcity is precisely what makes it valuable. In an age where skepticism toward institutions is at an all-time high, that kind of built-in integrity is appealing. Ordinary Americans are already buying gold as a hedge against economic uncertainty, and central banks are doing the same. By formally incorporating it into national policy, the government would essentially be aligning itself with the instincts of its own citizens and global investors. Of course, this isn't without its logistical challenges, backing even a portion of US debt with gold would require enormous reserves. While the US does hold the largest official gold reserves in the world at over 8,000 metric tons, the sheer scale of its debt means the coverage ratio would be modest at best. That said, the symbolic value of even a partial tie to gold could be enough to influence markets. After all, confidence is often as powerful as hard numbers when it comes to finance. If investors believe the US is serious about anchoring its financial system to something real, they may be more willing to buy treasuries, which in turn could lower borrowing costs and slow the debt spiral. What's particularly interesting about gold is that it bridges the gap between tradition and innovation. On one hand, it appeals to conservatives who distrust new financial experiments and long for the stability of the past. On the other, it can work alongside crypto, creating a hybrid system that blends the old with the new. Gold provides the timeless reliability, while crypto brings the adaptability and future potential. Together, they create a balance that no single asset can achieve on its own. Ultimately, gold's role in Trump's proposal is about credibility. When people see gold, they see safety, permanence, and trust. In a world where the dollar is increasingly questioned and debt feels unsustainable, anchoring the financial system to gold, even partially, could be the key to calming fears and rebuilding confidence. It might not solve every problem overnight, but it represents a step toward discipline, stability, and reassurance at a time when America needs all three more than ever. While gold provides a sense of stability rooted in centuries of history, cryptocurrency represents the opposite side of the spectrum, a modern, disruptive force that has emerged as a response to the very problems fiat money has created. And including crypto in the conversation about America's debt crisis might sound radical, but in many ways it makes sense. At its core, crypto was designed to challenge centralized control, inflationary policies, and the unchecked creation of money. If the US debt spiral is partly the result of excessive borrowing and money printing, then crypto offers a system designed to resist those very tendencies. That's why incorporating it into a broader financial framework has the potential to shift how the world views America's future stability. The first advantage of crypto is its limited supply. Bitcoin, for example, is capped at 21 million coins. No central bank, politician, or corporation can change that rule. This scarcity mirrors the qualities that make gold so valuable, but in a digital format that is accessible globally. In contrast, the US dollar has no such limit, and every round of quantitative easing or fiscal stimulus dilutes its value. For investors worried about the government's ability to keep printing money to cover debt, crypto represents a hedge against that dilution. By associating national financial strategy with crypto, Trump is essentially arguing that the US can align itself with an asset class immune to the very mistakes that caused the debt crisis in the first place. Another important aspect of crypto is its independence from traditional banking systems. In 2008, when the financial crisis shook confidence in banks and governments, Bitcoin was born as an alternative system. Fast forward to today, and the appeal of decentralization is stronger than ever. People are skeptical of Wall Street, suspicious of the Federal Reserve, and tired of seeing their purchasing power shrink. Crypto offers them a parallel system that runs on transparency, code, and distributed trust rather than centralized authority. For Trump to bring crypto into the debt conversation, it taps into that sentiment directly. It signals that America isn't clinging only to old systems, but is willing to embrace new ones that reflect modern frustrations. Of course, one of the main criticisms of crypto is volatility. Prices can swing wildly within a single day, which seems like the last thing you'd want in a national financial framework. But volatility is a function of adoption. The more mainstream crypto becomes, the more liquidity it gains, and the more stable it gets. If the US government were to recognize crypto as part of its strategy, it could accelerate adoption and maturity, smoothing out the very volatility that critics point to. It's similar to how early gold markets were volatile until they matured into the stable store of value we know today. By giving crypto legitimacy, America could help move it from a speculative asset to a mainstream pillar of finance. There's also a geopolitical angle. Right now, several countries are openly exploring alternatives to the US dollar in international trade. If America incorporates crypto into its system, it not only strengthens its own position, but also positions itself as the leader in the next wave of global finance. Instead of letting rival nations dominate digital currencies, the US would be at the forefront. That leadership could make crypto-backed or crypto-integrated debt instruments more attractive to international investors, easing the burden of America's borrowing costs. In a world where trust in the dollar is no longer guaranteed, aligning with crypto could serve as a hedge against losing dominance. For ordinary Americans, crypto also carries a psychological appeal. It represents freedom from manipulation and a chance to level the playing field. The same system that allows billionaires to move millions of dollars in minutes also allows an everyday worker to save in an asset outside the traditional banking system. That's why crypto has gained such a loyal following. It resonates with people who feel locked out or exploited by the current system. By proposing that the government embrace crypto, Trump is acknowledging that frustration and offering a solution that feels more democratic than policies decided behind closed doors at the Federal Reserve. That said, adopting crypto is not without risk. Regulatory frameworks are still incomplete. Scams and fraud remain rampant in parts of the market, and the technology itself continues to evolve. But every transformative system in history has gone through periods of uncertainty before finding its footing. The internet, for example, it was once considered a fad, filled with risks and chaos. Today, it is the backbone of global communication and commerce. Crypto may be following a similar trajectory, and Trump's plan seeks to put America ahead of the curve instead of behind it. Ultimately, the inclusion of crypto in Trump's proposals is not about replacing the dollar with Bitcoin or abandoning traditional finance. It's about creating a hybrid model where the strengths of both worlds, gold's permanence and crypto's innovation, work together. Gold provides the grounding while crypto provides the growth potential. By combining the two, America could signal to the world that it has both the discipline of the past and the adaptability of the future. In the end, crypto as a hedge is not just a financial tool, but also a symbol. It tells the world that America recognizes the flaws in its system and is willing to innovate to fix them. It reassures citizens that the government is not ignoring modern solutions, and it offers global investors a reason to believe the US and can remain a leader even in a time of historic debt. Whether or not this vision becomes reality, the mere act of putting crypto on the table changes the conversation. It forces us to imagine a future where America doesn't just survive the debt crisis, but emerges from it stronger, more innovative, and more resilient than before.